The largest asset managers in the entire world are buying more Upstart. So the Vanguard Group increased their holdings by 5% over the last quarter. Blackrock increased their holdings by 66%. And State Street increased their holdings by 47%. So we found this out through a 13F update in the middle of last month. Basically, what a 13F is it requires once a quarter for large asset managers to report their holdings. So once those asset managers reported their holdings last quarter, we got that update that they were buying more Upstart, which is definitely good to see for the stock. 5% increase, a 66% increase. They're definitely pretty significant jumps in shares in holdings. So that's definitely a good thing for the stock. Also, some other names that came into the stock. So we see D.E. Shaw basically initiated a position for 2.5 million shares, makes them the third largest holder. This is a hedge fund here, one of the most prominent hedge funds in the world. They are a higher turnover shop, so that means basically that they're selling and buying pretty quickly. So they're probably looking at Upstart as somewhat of a trade there. And then we saw Bank of Montreal also buy shares for about 2 million shares. That's what they hold. So this is all good to see. Also, we can see that Goldman increased their holdings by 58%. But they also increased their puts by 41%, likely just trying to play volatility there. But it is great to see that the largest asset managers in the entire world are buying more Upstart. With that being said, what I'll do in today's video is I'll go over a couple notes you need to know about Upstart. Then at the end of the video, I will give a price prediction based on technical analysis. So with that being said, let's take a look at the AI opportunity for Upstart. Upstart, which is an artificial intelligence powered lending platform for personal loans, auto financing, and credit card consolidation. Traditional banks can be slow to borrow, offer high rates, and can be restrictive to users with poor credit. Upstart flips this model on its head with automated loan services, which provide higher approval rates and lower loss rates than traditional methods. For example, you can see here the company's personal loan product offers 43.2 lower rates when compared to credit scored only models, while its small business loan offers anywhere between $5,000 and $200,000 in as little as one business day. An incredible 75% of its loans are instantly improved and fully automated. Its AI model takes a variety of factors into account, from employment history to application interaction, bank transactions, cost of living, education, credit experience, and much more. The company has shown that its technology ultimately performs as advertised, separating risky borrowers from deserving borrowers, something Upstart has supported with published data, as you can see right here. The grading system Upstart uses is very efficient in predicting if a borrower will pay back its debt, as A+ borrowers defaulted on average just 1.3% compared to E- borrowers, which defaulted at 16.2%. So you can see now that Upstart definitely has a massive AI opportunity, and AI really helps their business. Also, one thing I wanted to cover was that this stock is the 5th rated meme stock in terms of meme stock rankings on QuantQuiver. And this is basically just a score that shows how much the stock is being talked about on Wall Street Bets, and shows their failure to deliver score, which is at 98. So that makes this stock the 5th ranked meme stock. I just thought that was kind of interesting. And then one thing I wanted to cover as well was we've seen a good amount of insider selling for the company over the past 4 quarters. So over the past 2 quarters, especially, we saw 83,000 shares sold by insiders. So the people with the most information on this company are selling their stock. But at the end of the day, this is very typical of a newer company. So this company IPO'd in late 2020. And when a new company IPOs, you see a lot of those employees that were compensated with shares actually go and sell their shares in the coming years. And that doesn't really mean that they hate the company or anything, or that the company has poor fundamentals, whatever it may be. It really just means that they're kind of diversifying their wealth, right? If they have 50% of their wealth in a single stock shares, well, they're going to diversify themselves, right? Any financial advisor would tell them to do that. So I don't see this insider selling as a huge deal. It's very typical amongst early stage companies. So not shocked there. And then let's take a quick look at short interest here. So 31% of the float is sold short, which is a massive chunk of the float, right? Then we have 4.2 days to cover. So overall, this short interest is extremely high and definitely could signal a short squeeze. And when we take a look at their short squeeze score, so this is Fintel here, and they basically rank out every single stock in the market in terms of a short squeeze likelihood. And this likelihood ranks within the top roughly 10% of companies on the market, as you know, basically in the top 10% as most likely to have a short squeeze. So thought that was interesting. They have a 75 short squeeze score, which, as I said, puts them in the top 10. And then with that being said, let's take a look at the financials for the company. So as we can see here, the company doesn't make any money. The PE is not positive at this point in time, but we do have a price to book ratio of 4, which is actually significantly below Upstart's 5-year average of 12 for a price to book ratio. So for those that don't know, that's basically just the market cap relative to its book value. So it means that the market cap is 4 times the book value of this company, book value just being the assets on its balance sheet. So 4 isn't too bad when you consider that their 5-year average was 12. And then revenue growth is unfortunately pretty weak. So we have revenue growth declining 47% over the past 12 months. And over the next 12 months, revenue is expected to decline another 4%. Yes, I understand this number is still negative, but it is good to see that we're kind of slowing these declines. Hopefully that's a sign of better things to come for this company. And then let's take a look at the profitability metrics. So we have a 70% gross profit margin, which for those that don't know, that's basically just tells you what a company makes for what it sells. It's simply revenue minus cost of goods sold. An example I always use is, a lemonade stand. Let's say it costs you 30 cents to make lemonade, the cups, everything, and you're actually selling it for $1, your gross profit margin would be 70%. So this shows that the company can make money for what it's selling. It just simply needs to, increase its sales, right? Increase its revenue. So 70% number is pretty good. It's above the sector median, but unfortunately, it's actually below Upstart's 5-year average of 82%, which is kind of unfortunate. And then we also have cash per share of $5.29. Which is a good chunk of the market cap, almost 10% of the market cap, or really about 7%, I should say, of the market cap in cash per share. And then, that's over 10%. It's like 15% of the market cap in cash per share. And then with that being said, let's take a look at this company's balance sheet. So we talked about the cash per share, but we can see that the company has $443 million in cash per share and $1 billion in debt, meaning that they have $583 million more debt than cash. Let's take a look at Upstart's chart and give a price prediction. Obviously not financial advice, do your own research in D&D, but we're coming down to this $29 support level, which is where shares had bottomed in late August. It's also where shares had bottomed in late June. So I do believe this $29 level likely holds for the stock, and we see a move higher over the coming weeks for Upstart. Obviously, we have the 150-day moving average basically coinciding with this support level as well, which should help, give further credence to this support level. So thinking that this $29 level holds and we see a move higher over the coming weeks. Also, as prices have declined, we've seen volumes drop, which just signals that the selling trend is losing steam. Which obviously does imply that we could see a move higher. So all that being said, I do think this $29 level likely holds for the stock, and we see a move up to the 50-day moving average over the coming weeks, which currently sits at about $43 for the stock. So that's kind of what I'm seeing in terms of a price prediction. If you wanted to be a little safer, you could call this $38 level support and kind of play the move from 29 to 38 basically. So that's probably the safer call. But I still do think we move up to the 50-day moving average over the coming weeks for Upstart. So with all that being said, I think this company has an amazing opportunity in the finance space. It's my favorite stock. It's my favorite AI stock within the finance space, right? It's one of my favorite AI stocks in the market right now, and I don't think it gets the appreciation for its kind of AI tilt. Also, I do think the growth is kind of turning around here. We're seeing those declines slow a bit, and we just saw Blackrock, State Street, Vanguard buy more shares as the stock price goes up, which is awesome. And from a passive manager's perspective, it just says that the company is allocating more capital to this to Upstart, which is obviously a good thing for the stock. So with all that being said, I like Upstart long term. I think it's a good holding. I hope you enjoyed the video. I will end it there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.